morning, viewers. You're welcome to our Economy and Politics show, where we continue the conversation around policy, investments, politics, and how it affects the populace. If there's one sector that continues to be a very critical one to our country, driving our economy, providing revenue, and driving industrialization, is the oil and gas sector. And every time, like they say, it sneezes, it has its effects on the economy. So today, we'll be looking at the Nigeria oil and gas sector, challenges and opportunities for development and growth, particularly at a time where we face unprecedented global economic challenges, which has been exacerbated by the COVID-19 pandemic. With me to lead this conversation is Mr. Uwa Osadiaye. He's a research analyst and oil and gas analyst with FBNQuest. Nice to have you on the show, Mr. Uwa.
Good morning.
Thank you very much. Let's first begin with the second quarter 2020 growth rate of the Nigerian economy, which was published by the National Bureau of Statistics. Prior to now, the oil sector has always been a key driver of growth. Many analysts believe that even post the recession of 2016, we kept having that growth driven by the oil sector. And so it contracted for the first time since the 2016-2017 period to minus 6.6%. And now we are believed to be heading to a recession by third quarter of 2020. First, what are the implications of that contraction? Because prior to now, like I said, the oil sector has been a big driver of growth.
Okay, thank you. As you alluded to, the prior contraction in 2016-17, that period was driven more by Nigerian-specific factors. Of course, oil prices declined, but we had severe production losses. This time, it was a steep decline in prices, global oil prices, which affected value of transactions and trade within this sector. So the implications are quite obvious. From an operator company perspective, you'd expect CapEx plans and fieldwork programs to be curtailed in the short term. Longer term capital expenditure as well, you will lose expenses. The Ministry of Petroleum, just at the onset of the pandemic and when it began to affect demand, sort of put out an instruction to local producers to cut OPEX by around 30%. Would expect to see that sort of translate into much reduced spending through the course of the year. Nonetheless, I expect firms with big balance sheets and a lot of cash to be looking out for cheap acquisitions, in their respective markets, in particular in Nigeria. So for instance, there have been a couple of local casualties which have been unable to meet obligations. Those sort of companies will be acquisition targets of the big indigenous players. I also expect a few IOCs looking to divest a portion of their portfolio, having prioritized other oil provinces. Yeah. They may be looking to accelerate divestment programs to lower cost producing zones, because that's essentially the game currently. From a government perspective, the main implication is lower oil receipts, mainly due to softer pricing. Looking beyond what has happened in H1, the OPEC plus quota production curtailment should seal an LGDP contraction for 2020. Next year, we are likely to see a rebound both in price and production and an expansion of the sector.
Yeah. And even looking at who gives us very good, accurate information on developments in the global oil and gas market. This is one period that oil majors like BP, like ExxonMobil, like Schlumberger and Chevron all posted huge losses in the quarterly financial reports. And definitely, most of them have investments in Nigeria. So definitely we expect to see a review of the investments in the country. Is that the case, and what are the implications for jobs and also additional projects that were initially planned before now?
Yes, the big IOCs, I call them the big four: Chevron, Shell, Total, and ExxonMobil posted huge losses because, similar to a company that's listed in Nigeria, Seplat, prices, average realized prices for Q2, were in the region of, $20 per barrel, which is a 60% decline year on year in what they realized, last year. So effectively, from the top line severely weakened. But the bigger, there's something else that affected profits this year. Last quarter, it's IS 36. It's an IFRS rule where oil and gas firms are required to reevaluate their assets based on long-term pricing assumptions. So given what was happening in Q2, a lot of firms had to reevaluate long-term pricing assumptions, which led to severe impairments in their books. So for instance, Shell had an impairment of around $17 billion alone in Q2. For a firm like Seplat had an impairment of 140. So in terms of jobs, like I said, cutting OPEX effectively means you are the amount you pay for vendors of services. Some firms may size. Some firms will reduce their projects. CapEx plans effectively means you have less rigs on site. The rig suppliers wouldn't have a lot of work going on at the moment. So you expect jobs to be forlorn or job losses at this point.
Okay. So can you hear me?
I can hear you.
Okay. As the performance improves, definitely there will be more commitments from what you're saying.
Yeah.
Okay. So let's look at the major discussion points. This crisis has been described as one that should not go to waste. And if you don't want it to go to waste, it's a big opportunity to do some big things. And that is around the Industry Bill, much talked about right from 2010, even when we had efforts to develop that, right from the time when we had late Alhaji Rilwanu Lukman as Minister of Petroleum, who initially set the base for that reform. Now, there's need to expedite that bill. And just today, ProShare published point statements from the Nigeria Economic Summit Group, where the NESG, a leading think tank group in the country that brings advocacy for policy and the economy, applauded the work that's been done by the presidency to see to the quick passage of the Petroleum Industry Bill, and is urging further stakeholders consultations so that the resultant law will create the required enabling environment for investment flows, reserves enhancement, technology transfer, and utilization efficiency. So in terms of this PIB, the need for quick action from the part of the legislature, the National Assembly, and the executive, what are those issues that quickly needs to be done to see that this PIB no longer becomes a discussion point, but a reality, like we've seen with the CAM Act 2020?
I think it's essential to get everyone on board. Keep in mind the bill has, been going back and forth and being, discussed for over a decade. It means that, there are certain stakeholder groups that have not been very comfortable, with some of the terms in the proposed law. One of the most controversial bits was the fiscal terms surrounding the PSCs, the production sharing contracts, which was dealt with last year, and the government and the IOCs have continued to engage. We expect, because that was like the biggest problem at some point for the PIB. But we should keep in mind that the PIB generally want government take from the sale of petroleum proceeds, as well as creating a more efficient system. The previous Minister of State for Petroleum had divided the bill into 4 parts for speedy consideration. If you recall, a portion of the PIB, the governance section, was passed by the 8th National Assembly in 2018. However, the president, withheld assets. Certain sections were disputable. But on the face of it, the PIGB intended to create separate entities for industry policy and strategy, to create a regulatory body, and to create commercial institutions. That's the National Petroleum Company and an asset management company, as well as a liability company as well, and a coalition fund. But if I'm very honest, the PIB, having been in the pipeline for more than a decade, attract substantial investment, but it's still better, it still creates a more suitable environment for investors to come in. Remember that IOCs have begun to look for the lowest, lowest cost producing areas, and this is why some of the Nigerian assets have been sold. But what the PIB will do is that it then presents investors with new terms, new, clear, and undisputable terms, and perhaps could help with lowering cost of production. And I say this because one of the things we hope that it would achieve is that it would help in attracting investment within the midstream sector, distribution, pipe infrastructure, that has been lacking in the country for so long. But for me, one of the major, I think the main focus for the country has to be gas. And, the way the PIB addresses gas, around gas, production and all that is very, very important. Now, you look at the EU and the UK, the European, they are partners. They account for 50% of our oil exports, around 50% of our LNG exports. Our policy, in many respects, would have to match, their energy demand policies going forward.
Okay. I hear Mr. Uwa on the issue of the gas segment. I think we'll look at it because of this conversation. But let's look at one of the major discussion points again. Prior to the 2019 general elections, there were positions taken by various parties around subsidy. I remember 2012, there were protests when the previous government tried to remove the subsidy. Today, of course, we're seeing that step taken, and the government has said that they cannot sustain this level of involvement of having subsidy projects and all that. So we now see a more market-based approach in for premium motors PMS, and the masses, trade groups, and operators saying that this is going to adversely affect Nigeria. So I want to first ask you the timing of this this the right time considering the pressures of COVID-19 pandemic on income, and when the fact that a lot of people have big and job losses on one hand, and was it a step that was over delayed also, because a lot of people said this was something that would have been done right from the onset of this administration.
Okay, I couldn't hear, a few seconds within your question, but I think I get the picture. In 2016, when oil prices declined, and you know that crude oil is obviously the feedstock for refineries to produce petroleum products, right? So with an oil price decline, you have a product price decline. In 2016, the government had introduced this price modulation mechanism, passing on the benefits of lower prices. It's a market-friendly, mechanism. So when prices go down, you enjoy the benefits. When prices go up, you have to pay tab. But for reasons beyond, pure economic reasons, the government had to, put a stop to it in 2017 as crude oil prices rallied, because the decision was made not to pass on the cost at that point. But our view coming into 2019 in particular, after the successful re-election of the president, was that the government was in a much stronger political position to take a tough decision. It's obviously a very tough decision.
Yeah.
But with prices declining, I think it was the right time to reactivate the price mechanism. Like you found out earlier this year, gas prices, pump prices were sold about 125, 130 naira per liter. But we've had three shocks, over the last couple of weeks, let's say 6 to 8 weeks. Crude oil prices have rallied from, decades low levels. They're around 40 currently. And we also had the CBN's push to unify FX rates.
Yeah.
So the previous petroleum product import rate, conversion rate of 306, which was the official rate, is now 381, 382. So effectively, you could see that there is an upward bias on prices. So our view at the end of June was, prices are definitely going to go beyond the 145 naira ceiling. But it was a case of, would the government, be willing to stick to this pricing mechanism that it had adopted? And it appears that the government is currently willing. It's yes, we understand. I understand the implication for consumer pockets and so on, but has lost trillions of naira, or has spent trillions of naira on paying subsidies, and is currently not in a fiscal position to keep up, that sort of expenditure. So I think this is mainly the reason why, yes, the government has adopted and has stuck to his guns.
In this case, it calls for much more engagement with this.
And also, government must give away something, because this is a tough decision, like you said. But if they're going to endure it, there must be also a takeaway. I mean, they must give something too, give something up.
I mean, in terms of what can give away is if you had observed how the subsidy was even implemented. It was implemented through the NNPC, through the Conscious Federation account, which meant that the NNPC remitted money to the Federation for subsidies. That means that every level of the Federation, the federal government, state and local governments had less money to spend, So without a subsidy extract, hopefully these governments, more to spend, so on and so forth.
All right, so Mr. Uwa, then let's look at some of the investments we're seeing, particularly in refineries. We know that the NNPC refineries need to come up to scale, still issues around those ones, but the Dangote Petrochemical refinery is still in progress. And just recently, BUA Group announced a planned investment in Akwa Ibom State, 200,000 barrels per day. And then there are some developments around modular refineries, particularly in the Niger Delta region. How will these activities also help in the pipeline of distribution and production and improving access and quality and pricing for PMS for Nigerians?
Apologies, I didn't hear that question.
I'm saying that on one hand, now we're seeing the investments in refineries. The state refineries, the NNPC refineries have been below capacity, still trying to scale. But we know the Dangote Petrochemical refinery, and just recently, BUA Group is planning a 200,000 barrels per day refinery in Akwa Ibom State, and there are also some modular refineries being worked on in the Niger Delta region. How will these activities also help in the area of supply and distribution, and help to improve the pricing the mechanism for access to Nigerians when it comes to PMS? Mr. Uwa, can you hear me?
I can hear you now.
Okay, I was talking about some investment.
I couldn't have 50% of what you said. I mean, I heard.
Okay, can you hear me now? Okay, if you can hear me now, I'm saying that there's some investments in some refineries. Dangote Petrochemical, BUA Group is planning 200,000 barrels per day refinery in Akwa Ibom, and there's some modular refineries in the works. How will all this help in terms of improving distribution supply of PMS to Nigeria?
Okay, how would it help? Yes. So thank you very much. The Dangote refinery, is expected to produce at full capacity around 51, 52 million liters a day of gasoline. According to MBS figures, the country consumed 56 million liters a day. So, I mean, it gives you a very clear picture of the sort of solutions, the Dangote refinery provides for the country. Because it's being refined within our, in the country, we wouldn't have to deal with, certain cost, freights, MPA charges, the master charge, and all of those things. So effectively, prices, should see, a slight moderation. We wouldn't be, I mean, for instance, if we had Dangote refinery already in operation, pump prices wouldn't be close to what they are now. They'll be about 20-25 naira less per liter. So, hopefully the BUA refinery, given its location, given its size, should be completed within 2 to 3 years.
So can you hear me now? Okay, go on.
Close to 70 million liters. So effectively, Nigeria will become an exporter of gasoline within our region, and possibly beyond the region. So it helps in terms of pricing. It helps in terms of demand. It also helps the government in terms of its fiscal position as well. So those are very, very good developments,
Very, very good developments, and we hope that they will come to fruition. So let's look towards the end of the year now. Very key thing for Nigeria, the crude oil price. I mean, that, in short, we have a budget to present 2021, and part of it is that it drives our assumptions even. So currently, like you rightly said, it's hovering between $40 to $43 per barrel. What are you seeing as forecasts in terms of the crude oil price? It's currently in a volatile state. And what are the implications and scenarios for Nigeria in the range of if it's still at $40, $43 per barrel at the end of the year?
Well, I mean, going by OPEC forecast, we expect a run of around 7%, in demand driven by non-OECD, China, and OECD, United States. So everything is very dependent on, how these countries continue to reopen their economies and how demand, bounces back, how it will come back sustainably, because it drives demand of petroleum products as well. So it's all about the sustainability of demand going forward. From a supply point of view, OPEC Plus would always look to match demand. In April, the OPEC Plus announced storage of around 7 million barrels for the first 2 months, 7.7 for the 6 months, 5 days for the 16 months. So, intention to match, assumptions for how demand, would rise steadily. But by 2021, we expect oil demand to be at pre-COVID, which is good. I know.
So, can you hear me?
It was expectation, but ultimately, overall, we expect demand, will rise gently, steadily upwards, which should help, keep prices around, 45 levels for the next couple of months.
Okay, in your closing thoughts, Mr. Uwa, what are the opportunities for Nigeria's oil and gas sector in this whole challenge and crisis? We've seen that majors are reviewing their investments, CapEx, OPEX. We're seeing also the need for the PIB to implement it. You've talked about the positives of having the refinery projects and investments, various of them come on board. But what are the biggest opportunities, or top 2, top 3, to really unlock growth? Because this has been a sector that has continued to drive our economy.
Sorry, I didn't get. Did you ask for the opportunities for the country?
Yes, opportunities. This is one sector that continues, even as we continue to push for diversification of our revenue from crude oil. But what are the big opportunities now, based on the fact that you've already highlighted the issues like low investments, which we expect for now for the majors because of reviewing the operations, but the positives of refineries coming on board, various projects across the country that will help as we look at the market-based approach for the PMS pricing, and also the improvements that we expect to see by 2021 pre-COVID level of crude oil price. But what are the big opportunities for us to reposition this sector and make it come big for the entire economy?
Okay, I think from a policy perspective, the pricing, the regulation that has been done in the downstream is very good for business, is very good for competition. I would expect to see a lot of competition in that, in that space, from the major players and from, the companies that acquired, the big players. Clearly, the country has to focus on reforms, and this is a very good time to, take care of the PIB so that and IOCs and other indigenous players can, appropriately consider investing within this province. Secondly, thirdly, I think the country would have to, well, they are already doing it. The country is already doing it. The government is already doing it. Have to focus on, investments in oil and gas infrastructure like pipelines, oil depots, storage facilities. The Jakarta Kaduna Kano pipeline is a very good project because it's in the hinterland, and therefore, help with consumption and gas utilization. The country also, yes, the country to, look to, has to pursue, a diversification from an oil-based, an oil-dependent country to gas, because we have the gas, huge gas deposits to put.
Yeah, so we need to leverage the gas resource.
To make this happen. Like I said, the LNG market is globally expanding. In Europe, for instance, we sold more LNG to Europe last year, but even though we sold more, our market share in Europe declined, from 19% prior year to 13%. So Europe is buying more gas. So we have to, think about investing more in the LNG space. Yes, FID has been taken on, on a new train for LNG, 8 million tons per annum train. But the country needs to attract more investment within the LNG, and to help diversify our income streams.
Yeah, I hear you very well. Hopefully
these steps will be sustained to really make us enjoy the benefits of being an oil-producing country that is providing inclusive growth for all the citizens. Thank you very much, Mr. Uwa Osadiaye, Oil and Gas Analyst with FBNQuest, for your insights today on how we can leverage the opportunities amidst the challenges we face in the Nigerian oil and gas sector to drive industrialization and economic growth. Hope to have you in subsequent editions as we look around developments in the oil and gas sector. And that will be all for this edition of the Economy and Politics Show.
Thank you very much.
Yes. And that will be all for this edition of the Economy and Politics Show. You can have this conversation going forward. You can send your emails, comments, questions around the oil and gas sector and what you would like to see happen more in the policy side, and your concerns to news@proshareng.com. We'll always respond as appropriate. And also you can join our website, www.proshareng.com, and hit the search bar, oil and gas, to get all the oil and gas developments and reports as it affects the global and Nigerian economy. Till we come your way again tomorrow, 9 a.m., let's make it a date as we look at some very interesting developments in the policy, economy, and investment space. Stay tuned for 10 a.m. as we have a market review conversation where we look at developments in the financial and capital market as it relates to economy. Till we come your way again, thank you for watching. Have a nice day and stay safe.